Good morning, traders. It is Friday, October 18th, taking a look at the charts. Obviously, we got the Brexit deal that has come together. The question is, can it pass the votes? And of course, it's moving currencies in a pretty big way. If we take a look at the US dollar index, you can see the dollar has been in free fall mode the last more or less 4 trading sessions, down again today. And what's interesting is we've broken the support trend line that we had in the market. More or less, the market was trading up this support line, and we've broken through that, and now it's in free fall mode. Now the question is, where are we going to find the next critical support zone? And the line in the sand, it's hard to see these yellow lines, but let me just grab blue. Line in the sand will be somewhere down here. This is where we had significant topping, some significant previous price action, highs, lows, some more highs, lows, and the market's starting to get oversold, more or less from this top down to this low, and you have a little mini bear flag forming, and we got the second half of that move to the downside, bringing us down into this target, this 97. This will put us into a pretty oversold territory, huge selling going on in the dollar, and overall, I think we're going to find a bounce here soon, but it's deleveraging more or less from the dollar. Everyone's starting to feel more comfortable about other currencies. Money's going out of the dollar, it's going into the pound and the euro, and more or less money is also flowing out of metals. What's really interesting is gold's moved lower, silver's moved lower, and the dollar has been moving lower, which bucks the trend of what I was expecting. I was expecting a breakdown in the dollar would trigger a rally in gold, but it just seems that money was moving into gold as the overall safe haven and a currency store, a store of value until they figure out what's going on with their currencies. And so money is moving out of the dollar, out of gold, and into other currencies at this point. But I think we're going to see a point here where we see the safe havens, potentially the dollar and gold, find a bottom in the very near future. But this still may take a little bit of time for the market to bounce around, put in some type of bottoming formation. Now, if we take a look over at the equities markets, SP 500, again, we're still continuing an upward bias here for a few more sessions, and we're looking at this upward resistance area right across here. So we do have a series of a bull flag, another pop, we've got another little bull flag. We might see this continue to grind higher into this resistance zone, and then maybe next week we start to see price weaken, and there's potential for a fairly decent pullback in the market. But keep in mind, we're still trading in this range here, and the market may just trade sideways and consolidate and stay within this range. It doesn't mean it needs to break down just because our cycle shows a big potential down leg. We could stay within this range, and who knows, it could break to the upside. And that's why trading cycles is very difficult. You can naturally think you're going to have a big break to the downside, but all it means is that price will consolidate sideways, potentially during an uptrend, and just when a cycle is moving down. So that's what we got to be aware of, and that's why we come back to our trend analysis, our short-term trading strategies. Is we like to know what the cycles are pointing to, but we still trade our proven technical strategy to follow price, not try to predict it and pick tops or bottoms. So let's take a look over at the safe havens. Look at bonds this morning. Bonds are trying to carve out a bottom. It looks like the cycles have got some potential for some more downside or some sideways action here over the next week and a half. Again, the bonds are in a sideways pattern. They've had a nice run, consolidation, another run. They're in a much larger consolidation at this phase, and we'll see how things go. But overall, I am anticipating bonds to relatively hold up, and eventually we're going to see a big run to the upside when and if the equities market breaks down. So overall, letting bonds just do their thing, but they're starting to show some increased volatility here, and that's usually the sign that a bottom is slowly trying to get carved in. But we still could see continuation, extension to the downside. This will be a pretty important support level, this previous low. If it's broken, things could get a little more ugly, and we can see some type of washout low. But keep in mind, a washout low is actually a very bullish sign for any price action. You get an A, B, C wave. The C wave breaks this previous pivot low. This is what flushes everyone out. You get a big panic washout, sometimes a very sharp vertical drop, and then you see the market rebound and recover and go higher. So there's nothing wrong with the price action that's unfolding. If we do break to new lows, it can be seen as an overall a big, large bull flag, with a cleansing ABC correction, and it sets us up for a very big move. So we're not looking to jump on the gun yet for any of this. We're letting bonds, technically they're trading in the middle of their range, and we're going to let them do their thing. We need the trend to start to reverse to the upside, or we want to see some type of panic sell-off and down into a support zone, and potentially look to get long wind cycles are bottoming. Taking a look over at gold, gold down 1/3%, silver down 0.5%. Same type of price action as bonds, more or less. Again, series of bull flags. We are in this nice big bull flag here. It's consolidating. We still may see price flag down and continue to chop around or carve out some type of bottom, but overall we're looking for some type of reversal pattern to take place, and eventually we should see gold and miners take off to the upside again in the near future. Looking over at energies, natural gas, and just to recap, when I cover gold, again, silver is the same thing, series of bull flags. Miners are the same thing, series of bull flags. So when I don't cover gold miners and silver, just know that they're in the same boat that gold is. The whole sector moves more or less together. If there's nothing standout in any individual asset class within the precious metals, then I'm not going to cover it. Overall, looking at natural gas, it's trying to carve out this bottoming formation. You can see we had a move over here previously, and we had a spike in price and a new low, and then it came up and formed this more or less inverse head and shoulders pattern. We caught this move to the upside. This is the mini bull market we want to trade. This is what I talked with Adam Johnson from Bullseye Brief the other day. You've got to listen to that interview if you haven't heard it. It really explains our trading strategy really well. This is the mini bull market we're trying to catch. We try not to get too involved in the bottoms or the topping phases like over here. We want to catch the bull market phase into resistance and then move on for a fresh move and look at potential drops as well. But right now we're forming this inverse head and shoulders pattern again. We've got our cycles showing that kind of pattern. We could start to see another run back up to these recent highs going forward for natural gas. Looking over at crude oil, up 1% this morning. Crude's trying to hold this long-term support level. If we just go back to this price action, you can see here overall cycles are pointing to the downward move here over the next couple of sessions. Overall, it's kind of hard to see with this indicator on there. Let me just clear that off. But more or less, if we look at this support level across the chart, this is a really significant area, $51 per barrel. If this pattern breaks to the downside, we've got a pretty big drop in price. Remember, we've got a series of bear flags that have taken place. Bear flags are usually known as the halfway point. We also have a much larger bear flag forming here. And if that's the halfway point, we're looking at something to the downside where this move will be equal to this move. And if we use a Fibonacci extension, most charting tools have this. If you go from the high down to this low and back up to this high, carry it forward a bit, it gives us a downside target of where crude is likely to go. So we've got the pullback or the sell-off, we got the pullback, and then you've got your 60% move. If we bounce at 60% for a little bit, usually means we're going to, almost 100% of the time, we see 100% move reached. And of course, this 100% move happens to be the December low in crude. So this is the halfway mark of this pattern that potentially is forming. We need to break this 51, but things could get pretty ugly. It could be a great opportunity going forward. We'll let the market do its thing. It's starting to look like this could be a shorting opportunity to get into crude with a fairly tight stop above this blue resistance area, or potentially just above this area up here, this little consolidation, this mini bear flag. Anyways, that looks like about it for the day, and I'll talk to you in a little bit. Bye-bye.